The shift everyone's been talking about, anticipating, wondering, and even worrying about, well, it's here. But yet prices did not drop, at least not significantly, and I'll tell you about that next. For a few months now, we've been seeing signs pointing to the shift in the marketplace. I've been watching a few indicators in particular and wanted to see the outcome before I felt comfortable saying that the market has indeed shifted. But alas, it has. Now, the primary factor causing the shift, of course, is the dramatic increase in mortgage rates. And we knew that it would have an impact on the market, and it has. Its most obvious impact has been the impact that it's having on buyer demand. Buyer demand has been driving the frenzied housing market for the past couple of years, but when rates climbed so rapidly that home buyers put the brakes on the pace at which they were consuming houses, competition lessened and multiple offers lessened. Now, compared to the last couple of years, the change in the market has been fairly stark, but I'm not watching the news and I'm not listening to the headlines, so I'm not worried like the news seems to want you to be. It's still a seller's market, but with many more advantages for buyers than we've seen since prior to the pandemic. Now, some of the key indicators that I'm watching include inventory, pending sales, and price reductions, along with the mortgage interest rates, and we'll go over all of that. So let's start with inventory. Now, in 2012, about 10 years ago, the US had roughly triple the inventory of homes for sale. Today, we have about 334 million people in the US versus 314 million a decade ago. Now, that's an increase of about 6.34%. The US is estimated to have 353 million people in 10 years' time. Now, if 4 people share a home, we need to build at least 1.9 million homes per year to accommodate this rise in population. We've averaged well under that number in the past decade, about 1.29 million per year. The reality is we need a construction boom to meet existing and future demand. However, the amount of standing inventory of resale homes is nearly double what it was last year at this time, as buyer demand has declined in June. Buyer activity cooled in June. The number of contracts written on homes also dipped, ending 22% lower than this time last year, indicating that July's sales will also see a year-over-year decrease. And why wouldn't we? Compared to last year was a record-setting year. Compared to June of 2021, the number of listings that closed in the Denver metro area was also about 20% lower. Again, 2021 was a record-setting year, but there was a month-over-month decrease as well, which is far more telling than the year-over-year stat. In fact, that decrease was 7.5%. Now, this is actually the first decrease in closed listings we've seen this year. After a slight decrease in May, home prices actually leveled off in June. Based on the news you're hearing, is that really what you expected? Prices did not drop significantly. The median close price for a home remained at $615,000, and in fact, prices are still a median of 13% higher than we saw this time last year, so you've made money. I will say that May and June are historically the high water mark months of the year. Seasonally, we typically see high prices relax into the summer months, and by the time July's numbers come out, I'd be willing to bet that July's numbers for home values will be lower. Now, sales in the $1 to $2 million range have increased by 148% since 2020. Much of that, of course, is attributable to gains in homeowner equity, historically low interest rates, of course, and likely increased wealth from investments that performed well after the brief pandemic recession. In June, homes in all price ranges went under contract in a median of less than 6 days. Now, price reductions continue to be on the rise as homes can't garner the same bidding wars as we did earlier this year. Pricing can be tough, especially when sellers are stuck on what their neighbor's home sold for in the spring. Even using comparables from just 2 to 3 months out could result in overpricing a home due to the softening in our market. Now, mind you, we are still in a deep seller's market, but not as deep as we were in the spring. The reality is we are no longer in the market we experienced in the last 2 years. Rather, the market is similar to 2020, the pre-pandemic times, and the market was pretty good then too. The price reductions for homes that went under contract this last week did account for 35% of all transactions. So how much of a price reduction are we seeing? On average, the typical price reduction was about 6.1% of list price. Now, when you go to the store and you see something for 6% off, you don't usually get too excited. Put in perspective, that is not nearly as dire as the media is making it out to be. Now, is it? So what have price reductions done to the amount of days a home sits on the market? Well, the numbers say not much, and I say not much yet. Compared to last year and last month, listings only took 1 day longer to move to pending status in the MLS. Now again, I think we will see those numbers really start to change when we cover what happened in July in next month's housing report. So let's talk really briefly about interest rates for a moment, and those of you who are looking to use financing for your home purchase. Have you heard the saying, marry the house and date the rate? People use the term forever home all the time, but I've never heard anyone say the word forever when they talk about their mortgage rate. In fact, people usually brag about their refinanced rates that they get. And that's the point. Rates are not permanent. Rates can be refinanced. But mortgage rates fluctuate too often to cover them on a monthly basis in this report. So please check out our Mortgage Minute video series. And that's where I discuss what's going on with rates on a weekly basis with top producing loan officer Brian Daywald. Ultimately, what does this all mean for homebuyers? Regarding resale numbers, the number of new listings coming on the market stayed steady, while the number of contracts written on homes decreased. As a result, weeks of inventory moved up from 4 weeks to 5, and the number of listings active for sale at the end of the month was almost twice as many as we saw at the end of May, giving buyers substantially more choices. And this is what buyers have been clamoring for the past couple of years. As always, we understand that everyone's situation is unique, and now more than ever, who advises you matters. So please give us a call to discuss how the real estate market impacts you. We would love to hear from you. And of course, if you felt like this information was helpful to you in this video, please do subscribe, like it, and leave comments. Awful. Awful, awful, awful. That's so weird having that thing moving around. I can't keep my eyes on it.